Hey everybody, today is Thursday. It's the 27th of March 2014. Let's look at these markets. We did see a little bit further selling here today. It wasn't really bad though. I mean, we had a little bit of strength first thing in the morning and then pulled back and then just kind of meandered in here for the rest of the day. If we take a look at the daily chart where we are, we're just above that rising 50-day moving average, and we're into this prior band of resistance from late last year that in early this year that seems to be an area of where support is so far being found, again with that rising 50-day moving average. So I don't think that there's, in fact there is no evidence that the buyers are gaining control. We are still below a 5, 10, and 20-day moving average, and they're all declining as well. So I think we still need to be very cautious and choosy about what we decide to get involved in here. 184.5 is holding for now. 184.5 to 185 we've been talking about, and a little bounce in here wouldn't come as a surprise. But with these lower highs, don't get sucked into thinking that the market's ready to turn back around. I think it's going to take some time, and it's possible that we could still see some deeper selling here. So again, taking a look at that Fibonacci here on this 165 minute, or I'm sorry, the 65-minute chart, we're close to the 38.2% retracement, and that is approximately where we see this 50-day moving average. The 50-day moving average currently at about 183.36, and that retracement gets us to 183.28. So I think that cautiousness remains the key order in here. And the interesting thing was that the advanced decline line went back and forth a few times in here today, and finally did finish positive. But it was back and forth, and that kind of helped confirm the choppiness, I guess, that we were in. The Nasdaq lost a little bit more ground here, down 0.5 percentage point today, and this market, as we know, has broken significantly from its support level and is down here testing the 61.8% retracement, which was, as we had been mentioning, this prior level of resistance as well. So it seems as though it's in an area where it ought to find support. We can also look at the longer term daily chart here and see that's where those Fibonacci levels are. It also lines up with this 100-day moving average, which is advancing. And the last time, and you can see the 100-day moving average has been in the past an area where people have come in and supported this market. So with it down as much as it's been down recently, it seems as though you can't get too aggressive on the short side, but we are still in a downtrend, so it's guilty till proven innocent. And clearly, you look at not shorting after the deeper pullbacks, and it seems as though maybe we're going to get due for a bounce. If we got a bounce up to the 5-day moving average, that would get us up to 88.25. That would not turn this market back higher in the Nasdaq though, so be careful with that. That if you're playing for a bounce, perhaps up towards this prior support area, and where we see the 50-day moving average and the 10-day average moving actually catching up to it as well. So this area in here seems as though maybe something that would be some resistance if we get some bounce tomorrow. And it seems as though maybe these things are sold off enough that we do get a bounce. But again, even looking at the 1-minute charts, there's very little evidence that buyers are taking control. We finished down on the day. We finished just below that VWAP. We crossed above and below it, and we're showing a lot of indecision on this short term. So possibly due for a bounce, but the evidence isn't there. And if you do look for the bounce, it would only be for a day trade opportunity, and there's that shouldn't be interpreted as me suggesting that you do look for a bounce trade tomorrow. The Russell 2000 came down to its 100-day moving average, which is also, as we can see here, a 50% retracement of the year-to-date range. So here we are in an area that is also been a prior area of contention, that we had resistance over in here back in the fourth quarter of last year, turn into support, and then resistance once again. So this is a pretty important little battleground for the Russell 2000 in about the 114 level. You look at it on this 30-minute chart, there's zero evidence that the buyers are regaining control. And even on the 1-minute chart, we stayed below that volume-weighted average price. So, if you're looking for a bounce, again, it's high risk. It's not something that if you do get a bounce, don't feel as though we're going to turn back around and go to new highs. It's possible, of course, but if you're looking for a swing trade entry, take it from the day trade perspective first, and then if you continue, if the market continues to hold up and you feel like holding on into a winning position, then perhaps you could swing trade it. But again, I wouldn't suggest that. But I know people do that, so I'm just trying to share with you a way to do that, which is don't look at it as I'm entering for a swing trade. I'm just gonna buy and see what happens. Instead, if you're getting involved for a swing trade, make sure it's a smart day trade entry first, and then if the market does make a pattern of higher highs and higher lows on a shorter term time frame, then perhaps you want to hold it. But again, my suggestion would be not to with a declining 5-day moving average. The semiconductors dropped half of a percentage point right down to our key level that we wanted to monitor, and that's this $44.40 level. Today's low was in fact $44.41. We're also right at the rising 20-day moving average in this prior area of resistance. So it seems as though this should be a level of support for this market as well. Perhaps we get a bounce up a little bit, but then if we break below that 44.40, then I think the semiconductors could start to catch up on the downside a little bit, and that 43.75-ish would be a level where they look like they should be able to drop down to. So again, in all these markets, you have to be extremely cautious. The financials did lose further ground after dropping below that support yesterday at 22.25. We're below a declining 5-day moving average. If we get a bounce up towards 22.20 to 22.25, I would expect this is a likely area to find some resistance, as it is also where we see that declining 5-day moving average. So a lot of caution in the financials as well. Seems as though 28.75 to 28.80, this prior band of resistance, which turned into support here, might be the next level to be tested in the financials. The shares of Apple, I think for swing trades, you got to be out of this thing now. It just it's coming down. It's still holding that 535. That's what I had mentioned in the Yahoo video, I think, as a stop level, but it needs to settle down a little bit. It's right at the rising 5-day moving average, and we saw some selling early on. It did drop $2.50 here today, but it's trying to stabilize right here at that 5-day moving average, which is also actually the location pretty much of that 10 and 20-day moving average. So I think that maybe another day of consolidation. Perhaps this thing sets up for a trade to the upside next week, but a lot's going to depend obviously on what the overall market does as well.